Welcome to the first video investment view. Well, we are now into the second half of 2020, and it's been quite an extraordinary first 6 months of the year, a year that we will never ever forget. We have seen markets absolutely tumble, fastest ever, but recover fastest ever. The pandemic is still with us, but the markets seem to be seeing light at the end of the tunnel. Perhaps that might be optimistic. We've got to be a bit cautious about that. But the view looking forward into 2021 and beyond is very encouraging. So that's good news. What else are we seeing? We're seeing economies battered and bruised and have been in recession. Funnily enough, we're kind of coming out of the recession. And we know there's a huge pent-up demand out there for the consumer to spend. The consumer is a little bit worrying because of all the job losses that we're likely to see around the world. But if we can control that and that can be managed, we think the road ahead looks pretty reasonable. What else is going on? We've seen property markets suffer. We've seen funds locked down. Hopefully that will start to ease, but I think it'll be quite some time. And the reality of all this is that we're probably going to see a very different property market going forward. The demand for property will shift. Don't know quite how, where and when. Certainly offices don't look to be in such need. We've seen retail issues. We don't know quite what that will mean, but the logistics and the supermarkets and all these guys have done terrifically well. With all that's been going on, we've kind of stopped rebalancing because it's been too dramatic in terms of erratic movements in markets, which puts an investor at a disadvantage. Hopefully that will start to calm down in the months ahead. We hope maybe the beginning of August, could be even this month, that we might see something a bit more positive. All in all, we're pretty optimistic that once we get out of this, and I'm not saying we know the answer how we get out of this, but it appears that through all the noise and doom and gloom, there are some companies out there which we've invested in which are looking pretty good, and the fund managers are very positive. Fixed income's always trying. We're in a difficult market with interest rates almost zero and below, but we're seeing some interesting stuff from the central banks helping them out, and we've seen corporate bonds and investment grade bonds doing quite well. But we remain a bit cautious, so you might see more cash around in portfolios, and I wouldn't be saying that that's a bad move. I think to be a wee bit cautious right now is the way ahead. Avoid the noise, look forward, and I think we are hopefully on the right road to a good long-term recovery. Thanks for listening.